52 years after opening its first local office in Belize, Scotia Bank, along with its 9 branches across the country, is being sold to a new owner. This morning, news of a pending acquisition was confirmed by Lyndon Giuseppe, Executive Chairman of the Belize Bank Limited.
One of the strategic goals of the Belize Bank for quite a while has been to expand our regional operation and to become a regional banking franchise. So it has been a number of years now which we've been looking at acquisitions across the Caribbean. Over the last 13 months, the opportunity was presented to us when Scotiabank was deciding to leave the jurisdiction. And we engaged in discussion with Scotiabank over the past 13 months. These negotiations were on again, off again negotiations, and finally they consummated in us signing a deal on Friday.
That business transaction was carried out between the Caribbean Investment Holdings and Scotiabank Caribbean Holdings, parent companies for the Belize Bank and Scotiabank Belize, respectively. The move to sell off its assets is part of a regional withdrawal being undertaken by Scotiabank. It is following the lead of several other lending institutions that have also pulled out of the Caribbean.
They've all been withdrawing from the Caribbean basin. And even in Belize here is to bear in mind that we've had the Royal Bank of Canada disappeared, Barclays Bank, and now Scotia. And this has been repeated throughout the Caribbean. And so it was inevitable at some point of time that Scotia would want to consolidate its interests in other geographic areas and didn't want to remain anywhere in the Caribbean.
CIHL has agreed to pay up to $30.5 million for the acquisition of Scotiabank Belize, which includes shareholder equity of $28.5 million and a premium of $1.5 million. Departure notwithstanding, the multinational bank and financial services company is still on solid footing as it looks to invest in other international markets.
It is perhaps the best capitalized bank in the financial system, Scotiabank. So there's no question about the strength and the stability of Scotiabank. It's a very strong financial operation. What you have was a strategic decision by Scotiabank in Toronto to exit the Caribbean. In the last year, for instance, Scotiabank has sold all of the operations in the Eastern Caribbean. They are currently in negotiations to sell the operations in Guyana and also in Antigua. And I know a month ago they also sold their operations in the British Virgin Islands.
The Central Bank of Belize, as financial regulator, is aware of the purchase agreement between both companies.
The central bank has been duly notified officially of an agreement for the acquisition of all the shares of Scotiabank Belize by Caribbean Investment Holdings Limited, the parent company of the Belize Bank Limited. This agreement will, in effect, represent an eventual merger of these two domestic banking institutions. To be absolutely clear, while the transaction is commercial in nature between two private companies, it is the central bank's overarching interest, indeed, or sacred mandate, to safeguard the monetary and financial system stability and to protect the Belizean dollar for the well-being of Belize.
It's arguably the single largest investment to be made in Belize amid the COVID-19 pandemic and its resulting economic collapse.
For Belize Bank, in this post-pandemic world that we're about to come into, I feel it's very important that, one, that I'm prepared to make a substantial investment in the country at this point of time, when foreign investment coming into Belize is at probably its lowest ever. And secondly, to be able to have a financial institution here that can weather the storm and work closely with the government in order to operate in the best interests of all stakeholders, not just the shareholders of the ultimate parent company of Belize Bank, but the nation, the various sectors. So I'm looking forward to that.
What present employees of Scotiabank can take comfort in going forward is job stability. While a merger is inevitable, members of staff have been assured that there is presently no plan to make anyone redundant.
We have committed to Scotiabank that the staff of Scotiabank would continue to work for Scotiabank at least for the next 12 to 14 months after the acquisition takes place. After that period of time, we're obviously going to try and integrate the two organizations to ensure that we can get the synergies that we're looking at. But there's no intention at this stage for any sort of retrenchment and attrition of staff at Scotiabank.
Reporting for News 5, I am Isani Cayetano.